Welcome to Yellow Tunnel. My name is AAPL. I'm CEO and founder of Yellow Tunnel. And today we're going to have our weekly discussion of current market conditions. We're going to talk about Apple. We're going to talk about NVIDIA, other magnificent seven stocks, opportunities in the market. You know, do you invest in high beta, low beta stocks? We'll discuss Jackson Hole conference and interest rate decision and what to expect next. We have NVIDIA earnings, probably the next main event of the following week, of upcoming week. So let's do that. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. The main difference between Yellow Tunnel and maybe some of the other services out there is that we do two things. We build models. So we have a team, I've assembled a team of financial engineers that have PhD in mathematics and physics and economics, and they're building models using latest advances in AI. And you know, it's growing exponentially in terms of how much innovation is in the modeling, financial modeling. And then not only do we provide these signals, I actually trade them in a live trading room every day. So you can see Keith, Scott, and I twice a day, first hour and last hour, we trade these signals. So very important, that's to understand the main difference. Disclosures are very important, please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. I'm gonna go over some of the trades from this week and some of the trade ideas. So very important to understand the disclosures. And you can always pause the screen if you need more time to read the disclosures. Right, before we jump into trading psychology, a lot of people ask me why Yellow Tunnel. The idea is the light at the end of the tunnel, and trading psychology, very important, right? We talked about the economy of control, we talked about risk aversion, prospect theory, game theory. So there is a lot of biases, there is a lot of psychology, especially when market is volatile, like we've seen in the past couple of weeks. Very important to have a trading plan, and we'll discuss that shortly. But I think most of the people want to talk about interest rates and opportunities in the market. So let's do that. So first, let's look at Apple, right? We talked about Apple. Apple actually, there was a signal, and I'm going to trade this week Apple. For subscribers, you'll get a signal shortly. But Apple has been triggered signal. It's above 50-day moving average. It's very similar, actually, price pattern to NVIDIA. Going into the earnings, right? You have a kind of ascending 50-day moving average. I would argue Apple actually looks stronger than NVIDIA right now. About 50-day moving average within striking distance of all-time high, and I think that's an opportunity in the market. NVIDIA, a lot of expectations going into the earnings. So we'll look at the estimated move analysis, and we'll look at some of the trades that I've done this week to take advantage of these opportunities. So in terms of value stocks, right, we had Jackson Hole meeting, right? Powell confirmed that it's time to change the restrictive policy and start lowering interest rates in September. I don't think he committed to 25 basis points versus 50 basis points. Some economists believe that Fed is already behind the curveball in terms of lowering interest rates, and there is there's a higher chance of hard landing than there is of soft income. There's a high probability that the unemployment is going to go higher, right? They have two mandates. One is the employment. So the probability that employment is going to go higher is much higher than the inflation is going to go higher. So hence, they want to be a little bit more aggressive on interest rates cut. And you can see the differential between Fed rate and the 2-year yield is over 100 basis points, right? So markets anticipate that in the next 2 years, there'll be over 100 basis points rate cuts. So that means they need to start lowering rates more aggressively. And on that news, interest-sensitive sectors like value stocks broke out to all-time highs. VTV, right? Dow Jones is similar, but VTV has a lot of the stocks except momentum stocks. Dow Jones is actually triple top, but VTV is breaking out, and this is, I think, close to 3,000 stocks, but not your high beta momentum stocks. High beta momentum stocks like QQQ are still behind, right? They're just trading above 50-day moving average. which is positive, and basically trading at the 50-day moving average. Your QQQ, your Apple's, Microsoft, Amazon. Small caps, so you do have widening of participation. Small caps on the interest rate decision, again, broke above 50% retracement, rallied above 62%, very close to two-year high. This is where it struggled to break out last time, but it's still staying at the 224 level. So if you look at the participation, how many stocks are trading above 50-day moving average, you have a strong rally from the Monday's low, right? We had kind of April low twice, double bottom, and then the market recovered nicely and close to July highs, not within striking distance of July highs in terms of participation in the rally, which is bullish for the market. So those are some of the bullish signs in the market. In terms of interest rates, 10-year yield dropped significantly, right? It's within striking distance from August lows from that Monday, but the carry trade, when people had to unwind their positions when they were exposed to Japanese yen because they are planning to raise interest rates. Right now, the decision was put on hold, but nonetheless within striking distance. And a lot of people, economists, think that anything below 3.8, right, because the Fed rate is still 5.25. So anything below 3.8 and the Fed is not doing aggressive rate cuts, basically meaning a recession trade, right? So if we do drop below 380, or if we take out August lows, that would be more of a recession trade, right? And right now, good news are good for the market, bad news are bad for the market, but interest rates have been, on the good and bad news, are pulling back, right? With anticipation that Fed will cut interest rates. And two-year yield is below 30-year yield for the past couple of weeks, and not that far, 10 basis points between 2 and 10. Very weak dollar on carry trade continues to deteriorate. It's at year-to-date low, right? We are at 2024 low, which is bullish for the market. Usually the weak dollar is bullish for the market. If there is any sense of liquidity issues or recession, usually this is when the dollar rallies. But I think because of the carry trade, a lot of that sell-off has to do with the Japanese yen and carry trade. But euro is also relatively strong, right? So euro is also 2024 high and actually breaking out. So weak US dollar, stronger euros, stronger Japanese yen, that's usually bullish for S&P 500 stocks. High yield breaking out, right? So risk on trade. So that's also bullish. VIX is at 16, right? It's been as high as 65 on that Monday, but it's at 15 levels. So maybe slightly elevated compared to the last year. And what else is interesting? We have strong reaction regional banks up 5%, small caps, ARK Innovation, so high beta, interest sensitive stocks, rally silver, rallied 3%. Nvidia is close to all-time highs, right, above 50-day moving average. Crude oil, weak, but bounced back, right, on weak demand, global demand on crude oil. The only area questionable is Bitcoin, right? Bitcoin just got above, on Friday, on the above average volume, it just got above 50-day moving average, but it's still descending slope, not that far from 50-day moving average 200. And some people think that this is area of concern, right? So the area of concern that usually this is a proxy for risk taken. So there are some bullish signs, there are some bearish signs. If you look at the positioning, right? If you look at the positioning, how people are brokers, right? If you look at the gamma exposure, on spiders, September is well positioned actually. People were concerned about the sell-off, so there's still a lot of put buying in September expiration, and the levels 540 is well positioned. 540 is well positioned going into September. That's where the highest level of support. If you look at this Friday's expiration going into Nvidia, still 540 is where your support is. So there's not much support up until 540. We had some position at 550. I think people roll those positions over. There's very little left at 550, maybe 10,000. But more so the expiration, the October expiration. October expiration is kind of very weak. not a lot of positioning, and September expiration is around the corner, right? If we look at the positioning on spiders, friends at bar chart. So if we look at the gamma exposure for spiders, I mean, there's some 550, but let's select more strikes. Let's do 50 strikes. So there's still some positioning at 550, but then the next level is 540 of any meaningful levels. And then in terms of gamma concentration, you can see September 20. So usually options expiration, right, is a kind of a catalyst where if there is any negative news following the apex, you have a higher probability of pullback. And we've seen that in August sell-off. We've seen it in July sell-off, right? After July expiration, this is when the markets start pulling back, right? If you look at spiders. The pullback started after the expiration, right? Friday's expiration here, Friday the 19th, right? This is the next week. Any negative news, such as unemployment data or higher than expected CPI, and people are not positioned, right? They're not hedged, and then you can have these large pullbacks. Same thing happened in April, right? The April, Friday the 12th. Let's see, when is the April? Yeah, so April 1st, so third Friday is April 15th. You had a pullback, you know, close to 10% pullback. And now September, right? September. So I think going into September, you have people are positioned well, and we're probably not going to breach 50-day moving average. 50-day moving average is pretty well positioned. But once people come back from their vacations and back to school, and you have the apex, any negative news, whether it's CPI higher than expected, whether these geopolitical risk in Middle East, or maybe some default of regional banks that has high exposure to residential or corporate real estate, then you're vulnerable for a steeper pullback. So those are the different scenarios, and as a trader or as an investor, you need to look at all the scenarios, right? One scenario, we have double top and QQQ follows value stocks. Value stocks are already breaking out, small caps are breaking out. So scenario number one, going into elections, right? Just because there is seasonality, September is a weak month, but that doesn't mean that it will be weak, right? Because right now, value stocks is actually doing much better than the last August. They're already breaking out. So scenario number one, we're gonna have double top, consolidate, and maybe after NVIDIA earnings breaking out, right? Scenario number one. Scenario number two, maybe NVIDIA does deliver strong earnings, but all the good news already factor in, and market kind of just struggles finding direction, and maybe maybe revisits the lows, right? Depending on the news, maybe close, but probably trades in the range, somewhere between 560 and maybe 520, 530. In scenario number three, we take out the August lows, April lows, right? There's a lot of support here. April lows close, July lows are close, but there's more and more signs of recession, right? Let's say unemployment data, right? If the unemployment data ticks up from 4.3 to 4.6 or 4.5, then there's a high probability of recession, right? And all these Taylor rules and different rules that basically say that when these events trigger, then probability of hard landing increases. And it just takes mindset change, right? Nobody knows whether we're going to be in recession, but if more people believe it's going to be hard landing versus soft landing, then you can have scenario number three. Okay, so let's pause for a second and let's talk about those three different scenarios. How many of you say one, Vlad, value stocks already breaking out, small caps participating, mid cap rally, everybody is breaking out. NVIDIA is going to deliver strong earnings because AI demand is still very strong among S&P 500 stocks. And we have scenario number one, new highs, going into elections, right? September, October is going to be, unlike usually, going to be strong, and scenario number one. Scenario number two, maybe unemployment data higher than expected, maybe some regional banks have exposure to corporate real estate. Maybe housing data continues to deteriorate, or inflation comes back higher, and then we trade in a range. Scenario number 2, and scenario number 3, we take out the 200-day. We take out April, July lows. Luis too, right? We have a lot of people. Love it. Brian, Ed, George, Gordon, Luis, Mark, Peter, Richard, Robert, Thomas, Vaida, Walter, Wendell, Werner. All right, we have a lot of people. Thank you for participating on Sunday morning. How many of you say 1? We're going higher. 2, no, we're just choppy market sideways. 3, we're gonna take out April and July lows. August 2. Everything depends on the election. Short term, yes. I mean, election is in November. I'm just talking about, end of, well, it is already end. I'm talking about September, October, right? September, October. Elections, yes. After the elections, there will be volatility, but a couple months after, usually after the elections, market, kind of discounts. Thomas, 3. All right. So anybody 1? All right, so most people, it's difference between 2s and 3s. The difference in 2 and 3s, I'm gonna put 2. For the reasons I explained, I think, first of all, market is overbought, right? I think a lot of technicians kind of were, scratching their heads and saying like, this is like a V-shaped recovery despite higher than expected unemployment that hasn't changed, weaker economic data. We had some positive data in terms of initial claims and retail data, but they were not great, right? They were not great. And whatever the reasons markets sell off here, same reasons exist right now. Nothing has changed. It could change maybe if September unemployment data ticks down again from 4.3 back to 4.1 because of the seasonality or because of the hurricane effect or whatnot. Then maybe we can continue rally. But I think that inflation is going to be stubbornly high, right? Especially the rent and dwelling. Some of the services component of CPI are still elevated. So I think this is too fast, too high, and probably choppy market that trades sideways, right? I have compared this to last August, right, when we had a correction, but the rebound end of August was not, it was below the all-time high, where now we are already at the all-time high, right? And if you look at the value stocks from last August, right, we rally and we had very weak rebound, not even 50% rebound in value stocks, where now value stocks actually took out the highs and continue to rally. So I can present a bullish case, I can present a bearish case. So what do you do? What do you do? If there's an uncertainty in the market, I propose to be market neutral. I would not commit new capital into bullish positions, right? If you already have 4 bullish positions, I propose, especially if you're new to trading, no more than 4 positions. So if you already have 4 bullish positions, I would not commit new capital. I would just wait and see what happens in, especially OPEX. September options expiration, I think usually volatile. And then I would probably hedge at least maybe one of your position be bearish, right, on the market. But definitely, if you look at some of the signals from the last few days, right, this is aggressive power trader. So aggressive power trader is very sensitive to short-term price fluctuation, right? It trains and learns on the data and makes inferences on daily price fluctuations. And you can see, stocks like Medtronic, oil and gas. I don't know what, maybe it's escalation in Russia, war in Russia, in Ukraine, that Ukraine is, now occupying the territory of Russia. Maybe that's the reason for oil and gas pipelines kind of making all-time highs, despite crude oil being at 52-week low. But with oil, gas pipelines, WMB, I think OKE was one of the positions I took in oil, gas pipelines, strong signals, and healthcare, right? Stocks like Medtronic that deliver good earnings are at all-time high. And just in general, it is safety trades. People invest, instead of investing in Amazon, and maybe Tesla, right, where Amazon is still below 50-day moving average, Google is still below 50-day moving average, very weak rebound in some of these momentum stocks, but they are definitely they're pushing that money and they're buying consumer staples, right, Procter & Gamble, Coke, in very strong uptrend. You can see Procter & Gamble, all-time high, Coke continues to rally, and they are buying healthcare like Medtronic. How's UNH doing? Haven't looked at UNH for, UNH, right? So UNH continues to rally after the earnings, a strong uptrend. Healthcare and utilities, right? Utilities. So consumer staples, utilities, some of the REITs, right? Utilities, REITs on the higher interest rates are taking off, right? So Vanguard real estate REITs broke out, took all-time highs and continued to rally. And that's usually, warning signs that, it's a risk-off trade, right? That people are cautious. They're cautious about their positions. So that's one of the reasons for putting two. So how do we help at Yellow Tunnel? So we have different services. We just went over aggressive power trader. You can put your phone number. You can look at history of all the signals for each day, right? You can look at the recordings of live trading room where I actually trade some of these signals. You can, analyze stocks like Apple, Nvidia, to see what the short-term trends are and the long-term trends are. Let's look at Apple. Sorry, took a little longer. Yeah, so Nvidia is still in strong uptrend. So that's aggressive power trader, right? And you can see buy and sell signals, right? For spiders, 559, 558 by 569, and still strong uptrend in spiders. So that's aggressive power trader. Weekly power trader, similar models, but it analyzes different time intervals, right? If aggressive power trader is very sensitive to short-term, daily price fluctuation, the weekly power trader is more sensitive to weekly price fluctuation, right? So you have, but also you have BK, Bank of New York, right? Some of the investment banking, strong uptrend, making all-time highs, and some of the utilities, right? AAPL, in strong uptrend. So that's the weekly power trader signal. In dynamic power trader is where I actually trade these signals, right? This is my portfolio. I have position in Cisco, I have position in small cap, Eli Lilly, QQQ, SH, Silver. So these are some of the positions that I trade, and you can see, all of my orders, for the past 30 days, all of my positions, right? I closed Walmart, I closed Cisco position, trimmed Silver position. So you can see different trades that I do in dynamic power trader. In earnings power trader, like Nvidia, right? We can actually use estimated move analysis, right? For Nvidia, a lot of people ask Nvidia or Apple, right? But you would go to Nvidia or Apple earnings, right? You can see what the estimated move analysis going into the earnings, right? Sorry. Right, and basically tells you that market anticipates into the expiration, into next Friday expiration, 15% move, about $20 move on Nvidia, right? So Nvidia could be at all-time high, right? $20 will take you to 150, so it can break out to all-time highs on very strong earnings, right? This is just estimated move analysis. On weak earnings, you could get to 110, right? You can get to 110, and if we look at the gamma positioning, Nvidia, gamma levels. Let's do 50 strikes. So you can see a very large gamma. Let's do all strikes, show all. So you have a very large gamma at the money. So maybe that's something we can take off. But you can see in terms of positioning, right? In terms of positioning, 150 strike, right? Usually at the money, you kind of ignore this gamma, but at 150 is one large position, and at 120 strike, 120, and then the next is 115. So those are the positions. So again, in terms of position, a lot of people are selling 150 calls, and in terms of gamma, right, it's this. Most concentration is in August expiration going into the earnings. You have some position in September, very little position in October, but a lot of gamma concentration in September, and most of it is going into the event. And if you want to do the same kind of type of analysis for Apple, again, you have a lot of concentration at the 225s, 227 where it's trading, and the next level is 230, right? It's 230. And then you have different expirations. And again, August 23rd, you have a lot of concentration in weekly options, and then September expiration. So in terms of NVIDIA, to look at the more, to make it, these values are, let's see, the 20 strikes. Let's do 50 strikes. Maybe removing this and just look at the relative values. So 150 strike is more pronounced, and then 140. All right, any questions on NVIDIA estimated move analysis? So, potentially selling 150 call makes sense if you own 100 shares of NVIDIA to hedge your position. On the downside, you do have position at 120, but that's pretty close. Not a lot of positioning right at out of the 120 strikes compared to the 140, where this is 53 million gamma, and 50 strike is 50 million, right? This is 5 million, and then here is only 18, only fraction of these strikes. So on the downside, market NVIDIA could pull back based on estimated move. It could get to 110 level if they miss on any forward guidance. So that would be NVIDIA earnings. This week I did Medtronic. So this is where you can actually do where you can have a well-defined risk. Like Medtronic, I did Butterfly, I invested 45 cents. So I'm risking 19 plus 23, 42 cents, right? I risked 42 cents, and my maximum profit is $2, right? So I can invest 40 cents and make $2 minus 40, $1.60. So 4 times the return. Medtronic got close to the strike, right? Looking at the estimated move analysis and look at it where Medtronic had, I think you can still see it. Let's look at Medtronic. And there is still concentration at the 90 strike, right? So the highest concentration was at the 90 strike, right? 90 strike here, 88 and 90, right? So 90 strike was the highest concentration of gamma, and it could act as a magnet. And we got close, right? On Thursday, the high was 89.24, but it gravitated over 88. So in this case, I was able to, make 8 cents, right? So 20%. Invested 42 cents to make 8 cents. But in similar fashion, you can do Medtronic, right? You can do NVIDIA, right? So NVIDIA, you can go in and do, let's see, is there butterflies, straddles, verticals? Or you can do spreads, or butterfly spreads, right? So you can do butterfly long call spreads on NVIDIA, right? $20 estimated move, and let's do strike 150. That's what we said. High concentration was at 150. Yeah, so high concentration is in 150. And apply. So you can do 150 call, 160 call, 170 call. For 54 cents, right? $9.46, and this is your payout rate, right? So I assume here it's you buying one contract of 150, two contracts of 160, right? 60 cents, 80 cents. Sorry, all right, 80 cents. So there's 50 times 2, so 32 plus 20, 54 cents. Okay, so this is good, right? So, okay, so if you see high concentration of open interest, and this is where the market makers have to be delta neutral, then you select strike 150, and then you can do $10 spread, and you can risk 54 cents to make $9.46, assuming that you will expire. Well, in this case, it's 160 lag, right? 150. So if I do 160. Oh, no, we want middle strike to be 150. So yeah, we want middle strike to be 150, so 140. 140, sorry. So if you do 140, 150 strike, right? 140, 150 strike, so $3.25 minus 2 times $1.30, that would be 65 cents plus 50 cents. So that's your max loss, $1.13, but your risk reward payout is $8 to 1. I mean, obviously the further out you're going, your probability of success, increases, decreases, but your payout increases. But you want to select strike that has high open interest and where it can gravitate over to, right? And you have right now break-even probability, right? 19.6, but because of NVIDIA earnings and because we think, it can move up or down, you would do the same analysis on the put side in case it misses it, but this is where you can have this high risk versus reward payouts, assuming you're going to either have high probability move to the upside or to the downside. Any questions on how to analyze Apple or how to analyze NVIDIA going into the earnings, where you can have these asymmetrical returns that have relatively small probability, right? Only 20% probability, but this is just historical probability, based on implied volatility. But because you're looking at the gamma levels and you're seeing where the high concentration is, that gives you higher odds that if they do have a strong earnings and they do guide higher, it will gravitate toward 150, just like Medtronic gravitated toward 90 when there is a lot of positioning occurs at those levels. So let's analyze NVIDIA earnings. This is for Andrew. Andrew had a question. So we'll analyze, what to do to make sure that these bars have, in relative terms, look higher, because it's very hard to see that 150 has actually the highest open interest, outside of at the money gamma, which I'm not sure how useful that is, right? And then maybe even right click, right? If we can do right click here or something like this, or I don't know here, but you can actually right click and then we can go into a butterfly or spreads or calendars, and also populate option prices, because it's sometimes there's so many choices, hard to find them. All right, so we'll talk about that when we meet. Thank you, Andrew, for that opportunity. And thank you, everybody. You guys have been awesome. Any other questions before we move on? We have a lot of people today. Ed, George, Michael, Steve, Gordon, Lewis, Mark, Peter, Richard, Thomas, Violet, Walter, Wendell, Werner. Safe place to sell puts. Well, first of all, Vijay, there is no such thing as safe place. There is a such thing as probability, right? There is a probability, so you can do. We said that NVIDIA implied based on the. Actually, now that I'm thinking about it, we should in the right click have estimated move. So estimate. Let's go back to our friends bar chart NVIDIA. No, not what I want to see. Expected move. Right. So based on the formula there's different formulas for expected move. Andrew and I talked about this, but we're going to use their formula. I don't know, did they put that formula? Show me somewhere. But there's a formula. Oh, here we go. Yeah. So there's this I use at the money straddle, at the out of the money strangle, at the money, you know, to calculate this uses actually at the money implied volatility times square root of day still expiration, blah blah blah. But you know, close enough. They're all close enough, these calculations. So expected move $20, 15%, right? So then you look at the concentration, right? You look at the gamma levels. 130 minus 20 is 110 strike. There's not a lot of positioning at 110. Most position is at 120, right? Most position at 120. So you can basically say, how do I switch to puts? Circles, butterfly spreads, long put butterfly. This is how I switch. And then the strike we want where the high concentration is, let me think about it one more time, 120. So we'll do 130 strikes. Let's see, 130, right? That's the long leg, I assume. So 130, 120. Nope, also the other way around, 110. Okay, so 110, where is 120? 120 and 130, right? So this is a put butterfly where the middle strike, right? We talked about middle strike. You sell 2 times, right? That's your 2 times, and then you buy 130 and 110 put, right? So 110, 2 120 short, and 1 long 130, $10 spread, with the idea that this is where the high concentration is, and it's gonna, the market makers will be forced to buy at 120 if it does have bad earnings. So it's not, the question is not whether it's safe, the question is probability. So right now there is 30% probability, right, that you'll break even. I think this says break even. That means it's either gonna hit 130 or 110, right? I assume 130. So that's your odds. So the probably smaller probability that it will actually reach and stay at 120 level, I would argue maybe 20%. So anything below 120 is probably 20% probability, right? 20% probability that if they do have bad earnings, right, this is break even, that the stock will, you know, well, in this case, gravitates toward 130, 120 level, right? And, you know, reaches 110 level, 110 level. So that's how I would look at these probabilities of trading, right? Trading is not whether it's good, you know, safe or not safe. It's a distribution of outcomes, right? You have a positive outcome and it will move, you know, to $20 to the right, right? You have negative outcome and then you move $20 down, right? And if you maybe have strong earnings, but you guidance maybe a little bit weaker than expected, then you stay with that one standard deviation and you're just gonna stay within this expected move, right? It's gonna be less than 13%, maybe 5%, maybe 6%, but something along those lines. So think of trading as just distribution of different outcomes. Please repeat the call structure for the butterfly. Yes. So let's go back to our friends at bar chart. Now let's go to long call butterfly that expires. And some people do calendar spreads, right? They'll do sell the volatility in 8:30, right? Because people say, okay, Vlad, this has a lot of premium. This doesn't have a lot of premium. So some people say, okay, I'll buy October call and I'll sell, you know, August 23rd call, or I buy September 20 call because it has a lot of gamma, less gamma, but most of the gamma here. So I'm going to sell the strikes where the highest gamma is. So that's, you know, there's nothing wrong with that calendar spreads or diagonals. But talking about long call butterfly, if you want to express your bullish opinion, right? We said that the middle strike is 150, right? So then you say 140, apply. And so 140, 150, 160. Right, so you buy 140 call, $3.25. You sell 150 call, right, and then you buy, just in case hits a home run, you buy 160 call, right? So, and then the maximum loss is $13. This is a great way to participate in the upside for NVIDIA, where you invest $1, but potentially can make close to $9, right? So 8-to-1 risk versus reward, 20% probability you will break even, so it will reach 140, right? So 20%, you know, it will reach 140. Sorry, 140. I mean, that makes sense, right? It makes sense that it needs really, it probably has to hit a double or a home run for it to break 140, right? And the odds of home run and double are a lot less, right, than the single or getting striked out, right? So always think about trading as a probability distribution of different outcomes. But Butterflies allows you to participate in some of these trades with very limited capital. Trade has 44% chance, 140, 150, 160. But with 150 strike, Thomas, probably, you know, it's a lot less than 44%. Maybe reaching 140, it has that probability. But usually you just look at the delta, right? The way I would look at it, I would go to, if you want to know specific prices, you go to option prices, right? You go to, let's see, do we have Greeks here? Yes, 823. So if you want to see what's the probability of reaching 140, then you look at the delta, right? You look at the delta. So this is 1%. Open interest delta. August 23rd, that's the wrong week. We're looking at the wrong week. Let me see, 130. Sorry, this should be expired, but August 30, right? That's the next Friday. And then probability of getting to 140 strike is 30%. So 140 is 32, roughly 32% that it will reach 140 and stay 140. And let's see, did I apply August? No, this correct, August 30, sorry. Almost thought I picked the wrong expiration month, but okay. So that would be the setup of the trade. Thank you, Thomas. Vijay, thank you. Ed, George, Gordon, Luis, Mark, Peter, Richard, Thomas, Vijay, Walter, Michael, Steve, Fred, John. Great. You guys are awesome. A lot of people participating today. Thank you very much. Have a great day. And hopefully to see everybody in the live training room on Monday. Thank you.